The world watched as Saudi Aramco, the energy behemoth, joined hands with American giants in a historic display of economic collaboration. This wasn't just about oil. This was about forging a new era of partnership. Aramco, the world's largest oil company, signaled a strategic shift. The company, long seen as a pillar of the Middle East, embraced a future intertwined with the United States. These agreements, valued at a staggering $90 billion, are a testament to the changing dynamics of the global economy. These deals are not merely transactional. They represent a deeper strategic alignment between two global powers. The United States, with its technological prowess and innovative spirit, stands to gain significantly from this partnership. Saudi Arabia, on the other hand, seeks to diversify its economy and reduce its reliance on oil revenues. These shared goals have laid the foundation for a mutually beneficial relationship that could reshape the geopolitical landscape. The sheer scale of these agreements is noteworthy. $90 billion is a significant investment by any measure. It underscores the seriousness with which both sides view this partnership. This is not a tentative exploration of possibilities, but a bold commitment to a shared future. The deals span a wide range of sectors, from energy and technology to finance, highlighting the breadth and depth of this collaboration. The timing of these agreements is also significant. The world is grappling with the challenges of climate change and the urgent need to transition to cleaner sources of energy. These agreements, while rooted in traditional energy sources, also encompass investments in renewable energy and sustainable technologies. This forward-looking approach reflects a shared commitment to addressing the pressing global challenges of the 21st century. Saudi Aramco needs no introduction. It is a name synonymous with oil, energy, and global power. As the world's largest oil company, Aramco's influence extends far beyond the oil fields of Saudi Arabia. Its decisions impact global energy markets, influence geopolitical equations, and shape the economic fortunes of nations. The company's history is intertwined with the history of oil itself. From its humble beginnings in the 1930s, Aramco has grown into a global behemoth, responsible for producing a significant portion of the world's oil supply. Its vast reserves and unparalleled production capacity have made it a key player in the global energy landscape. Aramco's significance extends beyond its sheer size. It is a symbol of Saudi Arabia's economic might and its strategic importance on the world stage. The company's fortunes are closely tied to the fortunes of the kingdom, and its decisions are often seen as reflections of Saudi Arabia's broader strategic goals. In recent years, Aramco has embarked on a journey of transformation, recognizing the need to diversify its portfolio and adapt to a changing energy landscape. The company has made significant investments in renewable energy, downstream industries, and technological innovation. This strategic shift is evident in its recent agreements with U.S. companies. These deals mark a new chapter in Aramco's evolution. By partnering with leading American companies, Aramco is positioning itself at the forefront of technological advancement and global energy transformation. This strategic move will not only strengthen Aramco's position in the global energy market, but also contribute to Saudi Arabia's Vision 2030 plan for economic diversification and sustainable growth. The sheer magnitude of the deals struck between Saudi Aramco and U.S. companies is staggering. $90 billion. That's a figure that commands attention and speaks volumes about the ambition driving this partnership. These aren't just agreements on paper, they are blueprints for a new era of collaboration. These deals weren't confined to a single sector or industry. They spanned a wide spectrum of economic activity, reflecting the multifaceted nature of this partnership. Energy, technology, finance, all were touched by this wave of agreements, signaling a comprehensive approach to collaboration. In the energy sector, deals focused on expanding refining capacity, securing long-term supplies of liquefied natural gas, LNG, and exploring new frontiers in petrochemicals. These agreements reflect the evolving dynamics of the global energy market, where demand for cleaner-burning fuels and innovative energy solutions is on the rise. The technology sector witnessed a flurry of MOUs centered around artificial intelligence, AI, cloud computing, and advanced robotics. These partnerships underscored Saudi Arabia's commitment to technological advancement and its ambition to become a regional hub for innovation. The financial sector wasn't left behind either. Major asset management firms and investment banks signed agreements with Aramco, signaling a deepening of financial ties and a potential influx of capital into both economies. These agreements reflect the growing interconnectedness of global financial markets and the importance of strategic partnerships in navigating a complex economic landscape. These agreements, taken together, represent a fundamental shift in the dynamics of the global economy. They highlight the increasing importance of strategic partnerships, the need for diversification in a changing energy landscape, and the growing role of technology as a driver of economic growth and transformation. The energy sector formed the cornerstone of the Saudi Aramco-US partnership, with billions earmarked for projects that could reshape the energy landscape. This wasn't just about maintaining the status quo, it was about investing in the future of energy. The Motiva refinery in Port Arthur, Texas, emerged as a focal point of this investment. Already the largest refinery in the United States, Motiva was slated for a major expansion, further cementing its position as a critical node in the global energy supply chain. This expansion signified Aramco's confidence in the long-term viability of the U.S. energy market and its commitment to meeting the growing demand for refined petroleum products. Liquefied natural gas, LNG, also featured prominently in these agreements. Aramco, keen on securing long-term supplies of this cleaner-burning fuel, signed deals with major U.S. LNG exporters. These agreements highlighted the growing importance of LNG in the global energy mix and Aramco's strategic foresight in securing a stable supply of this increasingly sought-after fuel. Beyond traditional refining and LNG, Aramco also ventured into the realm of petrochemicals. Agreements were signed to explore the development of world-scale petrochemical complexes in the U.S., leveraging the abundance of natural gas liquids, NGLs, produced alongside shale gas. These investments underscored Aramco's commitment to diversifying its portfolio beyond crude oil and capitalizing on the growing demand for petrochemicals in various industries. Aramco's energy sector investments in the U.S. were not merely about securing access to resources or markets, they were about forging a deeper, more strategic partnership in a sector undergoing significant transformation. These agreements reflected a shared understanding of the evolving energy landscape and a commitment to navigating this complex terrain together. Silicon Valley meets the Arabian Gulf technology deals take center stage. While energy may have dominated the headlines, the technology sector wasn't far behind. Saudi Aramco's foray into partnerships with Silicon Valley giants signaled a recognition of the transformative power of technology. This wasn't just about digitizing existing operations, it was about embracing innovation as a core driver of future growth. Artificial intelligence, or AI, emerged as a key area of focus. Aramco, recognizing the potential of AI to revolutionize its operations, from exploration and production to refining and distribution, inked deals with leading AI companies. These partnerships aim to leverage the power of AI to optimize processes, enhance efficiency, and unlock new possibilities across Aramco's vast value chain. Cloud computing, another transformative technology, also featured prominently in these agreements. Aramco, with its massive data generation and processing needs, partnered with leading cloud service providers to enhance its data management capabilities and accelerate its digital transformation journey. These partnerships reflected the growing importance of cloud computing in enabling businesses to scale their operations, gain insights from data, and drive innovation. Robotics and automation weren't left behind either. Aramco, recognizing the potential of these technologies to enhance safety, improve efficiency, and reduce costs, signed agreements to explore the deployment of robotics and automation solutions across its operations. These partnerships signaled a commitment to embracing cutting-edge technologies to address industry challenges and maintain a competitive edge in the global energy market. Aramco's technology-focused partnerships extended beyond specific deals. They represented a broader strategic shift towards embracing innovation, fostering a culture of technological advancement, and positioning the company at the forefront of the digital revolution sweeping the globe. A financial powerhouse emerges. Aramco's strategic partnerships in finance. While the energy and technology deals grabbed the headlines, Aramco's strategic maneuvers in the financial sector were equally significant. These agreements signaled a new era for the oil giant, one where it leveraged its financial might to forge partnerships that would shape its future. Aramco, sitting atop a mountain of cash, sought to diversify its investments and secure its financial future. It turned to some of the world's most prominent asset management firms, seeking their expertise in navigating global markets and managing its vast wealth. These partnerships reflected Aramco's long-term vision, and its desire to ensure financial stability and growth for generations to come. Beyond asset management, Aramco also explored innovative financial instruments and partnerships. The Fund of One deal, a unique arrangement involving several leading investment banks, showcased Aramco's willingness to embrace unconventional approaches to managing its short-term cash investments. This innovative approach highlighted Aramco's financial acumen and its desire to optimize returns even on its most liquid assets. These financial partnerships weren't just about securing returns for Aramco, they also served as a conduit for attracting foreign investment into Saudi Arabia. By partnering with leading global financial institutions, Aramco signaled to the world that Saudi Arabia was open for business and eager to attract capital and expertise. Aramco's foray into the global financial arena was a testament to its evolution as a global player. It was no longer content with being just an oil company. It was transforming itself into a global conglomerate, leveraging its financial muscle to secure its future and shape the world around it. Vision 2030. Saudi Arabia's ambitious plan for economic transformation. To truly grasp the significance of Saudi Aramco's $90 billion pact with U.S. companies, one must understand the grand vision it serves. Vision 2030. This ambitious roadmap, spearheaded by Crown Prince Mohammed bin Salman, aims to transform Saudi Arabia's economy and reduce its reliance on oil. For decades, Saudi Arabia's economy has been synonymous with oil. While this has brought immense wealth, it has also created vulnerabilities. Vision 2030 acknowledges this and seeks to build a more diversified and resilient economy for the future. Aramco's deals align perfectly with this vision. By partnering with U.S. companies in sectors like technology, renewable energy, and tourism, Saudi Arabia is paving the way for new industries and job creation. These investments are not just about boosting GDP, they are about empowering Saudi citizens and equipping them with the skills and knowledge to thrive in a post-oil economy. Furthermore, Vision 2030 emphasizes social and cultural reforms. The plan aims to create a more vibrant and open society, attracting talent and investment from around the globe. Aramco's deals, particularly in technology and innovation, contribute to this goal by fostering knowledge transfer, creating opportunities for collaboration, and positioning Saudi Arabia as a regional hub for technological advancement. The $90 billion agreements are not merely business transactions, they are a testament to Saudi Arabia's commitment to Vision 2030. They represent a bold step towards a future where Saudi Arabia is no longer solely defined by its oil reserves, but by its diversified economy, its innovative spirit, and its role as a global leader in the 21st century. Market trends and global implications. A new landscape takes shape. The ripple effects of Saudi Aramco's $90 billion agreements with U.S. companies extend far beyond the boardrooms where they were signed. These deals are poised to reshape global markets, influence geopolitical dynamics, and accelerate the transition towards a new energy future. In the energy sector, Aramco's investments in U.S. refining capacity and LNG projects will have a profound impact on global energy trade flows. The expansion of U.S. energy infrastructure will likely increase American energy independence, potentially altering the dynamics of global oil and gas markets. The technology partnerships forged between Aramco and Silicon Valley giants have the potential to accelerate innovation in the energy sector. The application of artificial intelligence, cloud computing, and robotics to energy exploration, production, and distribution could lead to significant efficiency gains, cost reductions, and even the development of new energy technologies. Geopolitically, the agreements underscore the deepening strategic partnership between Saudi Arabia and the United States. This alignment, driven by shared economic interests and a common vision for a stable and prosperous Middle East, could have significant implications for regional security and global power dynamics. However, these agreements also come at a time of heightened geopolitical uncertainty. The global energy transition, driven by the urgency of climate change, is creating both opportunities and challenges for traditional energy producers like Saudi Arabia. The long-term viability of these investments will depend on Aramco's ability to adapt to a changing energy landscape and navigate the complexities of the global energy transition. The $90 billion deals are a testament to the interconnectedness of the global economy and the evolving nature of geopolitics in the 21st century. They highlight the importance of strategic partnerships, the need for diversification in a changing world, and the transformative power of technology in shaping the future of energy and the global order. A catalyst for growth, unlocking future opportunities and shared prosperity. The historic agreements between Saudi Aramco and U.S. companies represent much more than just a series of business transactions. They symbolize a shared vision for a future defined by collaboration, innovation, and mutual prosperity. These deals are not just about extracting resources or maximizing profits, they are about building bridges, fostering understanding, and creating a more interconnected and prosperous world. The $90 billion investment is a testament to the confidence both sides have in the long-term potential of this partnership. These funds will flow into a wide range of sectors, creating jobs, stimulating economic activity, and fostering innovation on both sides of the globe. This injection of capital and expertise will have a multiplier effect, generating further investment, creating new opportunities, and raising living standards for generations to come. The knowledge transfer and technological collaboration fostered by these agreements will be invaluable. By sharing expertise, best practices, and cutting-edge technologies, both sides will benefit from accelerated innovation, increased efficiency, and the development of new solutions to global challenges. This exchange of ideas and knowledge will not only benefit the companies involved, but also contribute to the advancement of science, technology, and human progress as a whole. These agreements also carry the potential to foster greater understanding and cooperation between Saudi Arabia and the United States. By working together on projects of mutual benefit, both sides will develop deeper ties, build trust, and break down barriers of suspicion and mistrust. This enhanced understanding and cooperation will be crucial in navigating the complex geopolitical landscape of the 21st century and addressing shared global challenges. The $90 billion pact between Saudi Aramco and U.S. companies is a beacon of hope in an increasingly uncertain world. It is a reminder that even in a world often defined by competition and conflict, collaboration and mutual benefit offer a path to a brighter future. These agreements are not just about dollars and cents. They are about building a better tomorrow for generations to come.